What is up, everybody? This is Stock Market Education, and today we're going to be talking about MGM and whether or not it's a buy. Let's get into it. MGM is a company that owns and operates integrated casino resorts all around the world, with most of its properties in Las Vegas. MGM is a special company because they own and operate many different businesses like hotels, casinos, convention centers, entertainment, food and beverage, and many other things. And the hospitality industry has been one of the hardest hit industries in the world over the past few months. And if we look at the price chart, we can see that MGM stock was $35 at the beginning of the year, and now it has completely crashed down to $9 a share, falling 80% from its recent value. And you can see that this stock is experiencing extremely high sell-offs in the recent months, as well as the stochastics indicator is extremely oversold at the moment. I mean, you'd have to go all the way back to the Great Recession in 2008 to see hospitality stocks fall this much. Wall Street and mutual funds and individual investors seem to have given up on MGM, but the board of members and company executives see a different story. Why else would they be buying heavily into MGM stock during the worst crash since 2008? So that's why we're going to take a closer look at MGM. And if you guys have any requests for stocks you want to see videos on, just leave them down in the comment section below. With that being said, let's go ahead and take a look at their numbers. When we look at MGM's numbers, we can see that they have a market cap of $4.5 billion, which is pretty low when you take into account how many properties this company has in Las Vegas and Asia. They have a PE ratio of 2.35, which is extremely low when you compare it to the S&P 500's PE ratio of 17. There's a lot of cheap stocks on the market right now, but MGM is dirt cheap. I mean, really. They used to have earnings per share of $3.88. However, that number has gone down dramatically over the past month, which we'll look at in a moment. They currently pay a dividend of 7.79%, and they're most likely going to cut their dividend payment due to the current situations in the market. However, they only have a payout ratio of 13.4%, so a 7.79% dividend yield is actually sustainable for MGM. If we look down at the end of this article, we can see that it says the company has $8.2 billion worth of strip real estate sales, giving it what Murray called its strongest balance sheet in decades. This is extremely important because a strong balance sheet will allow MGM to be able to make it through this stock market crash and possible recession. If we look at their earnings estimates, we can see that their estimates decreased from $3.88 a share all the way down to 58 cents a share, which is an extremely dramatic decrease that's going to take MGM Resorts a decent amount of time to recover from. With that being said, I expect the price to fall even lower in the short term. In addition, the stock price did shoot up 18% the day before I'm making this video, which presents a great selling opportunity for the company. We can see that they expect an increase from 58 cents a share to $1.18 a share for a percentage increase of 103%, which when you look at the stock from that perspective, it becomes more and more interesting. Let's take a look at their growth strategy. Japan is legalizing gambling. However, they're only allowing one gaming company to operate in their country. However, MGM is one of the top candidates for that position. Japan is extremely important for these companies to get access to because the Japan casino market can be worth up to $15 billion. Just to put that into perspective, Las Vegas, the hospitality capital of the world, has a market worth $11 billion. So Japan's market could be 36% bigger than Las Vegas's because they'll have so much more exposure to Asia. When we look at MGM's compelling growth strategy, as well as their 103% expected earnings increase between 2020 and 21, and their high dividend yield with low payout ratio, and their strong balance sheet, and their severely oversold stochastics levels, and the fact that 16 board members and executives, the people who know this company inside and out, have started loading up on shares at these prices, you also have to take into account that their earnings estimates have decreased substantially from $3.88 down to 58 cents a share. However, I think it's safe to say that MGM could be a great stock for an investor looking for a dividend stock within their portfolio. This one is currently on my watch list right now, and I'm looking to buy if the price keeps going down. Thank you guys for watching the video. If you want to see more videos like this one, click the like button and subscribe, and have a great day. Bye.